Hello and welcome back to the channel. My name is Alex, and in this video, we're going to use Wyckoff analysis to see what all the major markets are doing. We're going to look at SPY, QQQ, GLD, and Bitcoin. If that's something you're into, stick around. All right, and to start off this video, what you're looking at here is ticker symbol IBIT, the iShares Bitcoin ETF. And as you can see here, I think last week we did some TA on what we thought about Bitcoin, how we said, okay, as long as it stays in this little range, like there's nothing wrong with it, made a new high. And then we drew these ranges of where it had to hold. And we drew this blue line right here saying, okay, a lot of the sellers are stuck right here on this candle right here. So staying above this candle would essentially keep Bitcoin bullish. And what we saw on Friday was a big decline, broke out of this range on heavier volume. And yeah, it looks like today they gapped it up and they brought it into the range and they sold it off intraday. Now, what I did last Wednesday, or actually over this weekend, is I put this little anchored VWAP on Wednesday's candle, which is the Fed decision, which I think is another market schisming event. I guess Friday is the real schism event when we had the employment numbers come out. But essentially, I think a new trade or a new regime has started on Friday. And so I'm just going to start tracking stocks that outperform or underperform, or the market that outperforms or underperforms from that day on. Because I think it's a big deal to have that much of a miss on the employment. And then people are saying, okay, rates are going to come down. It's a big change event. So there's going to be that anchored VWAP there. So from that anchored VWAP, as you can see here, if I go to an hourly time frame on Bitcoin, Bitcoin wasn't able to reach that anchored VWAP, okay, and it kind of got rejected off of this range. So Bitcoin, if it was to continue to be bullish, any kind of Wyckoff analysis would say, okay, we have our buying climax, we have our automatic reaction right here, and then we have a test, and this test was not able to overcome the high of the buying climax. So it's a little bit of a weaker range, but it did kind of stay up here for a long time, and it kind of stayed in the upper part of the range. And we've had tests to the downside, and now we broke to the downside. So what we would be expecting, if this is stay bullish, was this thing should be and get back to the highs of the range. Okay, that's what it would be ideal. But the fact that it's kind of getting rejected here is unfortunate for the bullish case on Bitcoin. But as long as it stays above this candle here, it's still in play to the bullish side. So it could keep going up. And given that we think that rates are going to go lower from now, and perhaps there's a difference in how people are playing Bitcoin, it could be more defensive or more uncorrelated to the market. That would be the hope. But nice to see that this volume came in, and then it got instantly negated on much lesser volume. So Bitcoin still looking bullish. Okay, that's basically all I see out of there. As long as there's nothing else to say. Yeah, so Bitcoin's looking pretty good. So let's move on to the IWV, which is normally how I start some of these videos, but I just decided to do Bitcoin first. But yeah, so if you guys are familiar with my videos, I like IWV because it's the Russell 3000. It basically takes every stock in the market. It's the broadest ETF, that you can kind of look at. And I like to use that for my analysis. So what we were saying on Friday is the market monitor turned red, and I'll show you guys that cycle after I do this segment. But essentially here are my cycle forecast lines. Essentially we're in a red cycle now. So, market monitor suggests we should go down 2% in 6 days. We had a nice move on Friday that basically got all of the losses from a red cycle in one day. So, we made the case that it could bounce here, and yeah, we got a pretty significant bounce that kind of got the entire gap back, but it went right back up into this anchored VWAP from the Fed day, but it's still underneath. So, it's still bearish, even with today's action. And typically in red cycles, you see this kind of action where it's like it just increase in volatility. So we're still bearish until we have 3 days without making a new low. But as far as the market monitor and as far as my cycle analysis, even my Wyckoff analysis is like it's still bearish. It just needs more time, unless it just V's and goes straight back up. So if we have another day like today where it goes up another 0.8, that would be back to a bullish kind of environment. But today it's kind of a sketchy candle. Or interesting candle. But I don't like to do TA on IWV, like in terms of the volume and Wyckoff analysis. So with that, let's go check out this market monitor cycle and see what's going on there. I just want to show you guys that really quick. All right, so as you can see here, we are still market monitor red, and we are day 2 red. The average move in a red cycle is about 2.13%, and it takes about 6.4 days. And currently, with the move on Friday and the move today, we've gone exactly negative 0.01, so almost nothing. We've done nothing, and the distribution count is full. So I just thought I'd show you guys that before we move on to the S&P 500 analysis. All right, so I think we're going to do a little bit more bulk analysis on the S&P. But as you can see here, yeah, we had a big increase in volume on Friday, pretty climactic. I mean, if we go back, this was a large amount of volume. If we compare it to, let's say, this Liberation Day candle, this Liberation Day candle went 4.78% for Liberation Day, and this candle had more volume than that, and it's at a higher price. So there's a lot of people buying this dip. Pretty remarkable there, because the market only went down 2%. So it went down half as much as here, okay, on more volume. So there was a lot of buyers in this candle. So that's very bullish. And as you can see here, that anchored VWAP from the Fed day, we are actually above that anchored VWAP. So that's bullish as well. They tried to stop it there, and we kind of held above. So, this is a bullish reaction, off of our, initiation of a red cycle. So that means that, okay, this is it's a stronger red cycle, so that it could be weak. We were saying that, we were making the case for that for a while, that this dip would be fast. Obviously, it was a little fast on Friday, but it got a lot of it back on half the volume. So all of this is pointing to, this down bar is bullish. This reaction is bullish because we got it all back on almost half the amount of volume. So that's really nice. We were also in previous videos, we were saying that this up wave was, very strong up wave, and then it was getting a little bit weaker here. So the fact that this one candle kind of negated this entire up wave here makes sense, but the buyer stepped in. If we go in on a hourly time frame, we had identified this little range right here, and it seems like that was kind of the point for it to spring. So it did do a spring on this little range. It could be bullish from here because it is above the anchored VWAP, but we're still below this moving average right here. And it would need to reclaim this area right here. And so what I like to do here is I like to draw areas on the wicks, okay? Or as I like to say, it's like the smartest guys in the room, people who are buying these wicks, creating these wicks, and then you get a move after that. So, if this SPY gets above, what's that level? 633, that would be seen as a sign of strength. But it still remains to be seen. We are still, I think it would be healthy for the market to not continue to go straight up, but kind of go sideways here. It would make a lot of sense, actually, if this red cycle did something similar to over here, where, you know, got it back, but it's a little bit quicker, and it just goes sideways, and it lets this moving average catch up. So, you know, I was initially thinking it would just go down to this average very quickly, but, you know, it remains to be seen. I think for today, ending at the highs of the day on low volume after that candle on Friday, it should continue. The expectation would be for it to continue upwards. And if it doesn't, if we kind of go down tomorrow, that would, you know, we should go back to the lows. Okay, so it's that simple. So, you know, if we go up today and we break above this level here, that would be bullish. We would renew the uptrend. But if it doesn't do that tomorrow, we would actually see a nice little decline here. So moving on to GLD. So we made the case for GLD on a last video. We outlined this range here, and mind you, GLD gold has just been very strong. This is the first kind of consolidation on heavy volume. So it's getting up there. You know, it's been killing it for a long time. But we made the case that this is the range. We saw them come back in. I mean, throughout this entire range, we were seeing them come back in. They came back in here, this volume here, here, here. They would always buy it here, and then they came back in again. And this is what I was looking for, you know? I mean, it was like we were saying here that this thing is bouncing off this quarterly moving average. It could make a run, but ideally, if gold is going to continue to go higher, you'd want to see a little V kind of shakeout. And actually, it didn't go underneath the range. And this is the first time it didn't go underneath the range. And it's Ving very quickly. So gold is very bullish, I think. I think gold can go back to the highs here and go sideways and then break out even more. So our positions in the silver miners and gold miners are loving it. And I think they're going to make another leg here. I think gold looks pretty nice. It looks even stronger than you know, Bitcoin, because it's been going sideways for a while, you know. And even this climactic kind of action, this is kind of a bullish range because it's every time it's gotten back to the top of the range, you know. If it's a bearish range, like it never makes it that far up the you know, back up to the highs after this kind of a climactic volume kind of a thing. So more continuation there. You know, it always could remain to be seen if it upthrusts here. And for those of you guys who are new, like an upthrust is basically when here's the top of the range, comes up here, and an upthrust is like that. So, you know, here's your top, boom, boom. Versus a spring is something more along these lines with the stock. This is the bottom of the range, okay? And it, you know, undercuts and goes like that. So that's what spring and an upthrust are. And that's what we look for in Wyckoff. So that's gold. I mean, it looks like as it completed a strong spring here, and it's just Ving, so that's a good sign. So moving onwards to the QQQ. We made the case on Friday that you know, it looks like a longer term top here because it's been in this uptrend for so long. Okay, and then it had this head and shoulders thing, and then the distance from the yearly moving average, everything looks to be bearish long term for sideways or revisit to the April lows or something like that. But you know, I mean, it's going to be choppy here, but if it's able to retake this high, that would be very bullish, and it would negate everything I just said because, you know, that thesis depends on it going down right now. So Qs are a little bit weaker than the S&P 500, where the it hit this anchored VWAP off of the Fed day, and it was able to rally into the day here. Same thing as in the SPY. I mean, this is a little bit stronger, but you know, it's very similar. You know, big volume yesterday. There is a little bit more volume into the Qs candle, so that is a little bit more bearish because it is heavy going into this retracement. So, you know, same thing. You know, if this thing continues to go higher and it kind of gets back into this candle, because I think this is the main candle, that the control candle. This is a significant candle, and as if they can keep it, you know, below this candle here, that would remain bearish, right? But the fact that they were able to gap it and, you know, negate this entire candle where there's a lot of buying happening. I mean, look at this. Let's see this. Not as much buying in the QQQ as in the S&P 500, but let's see here. So, yeah, similar. Let's see, how much was that? Wow. So that was, let's see here, 6%. Wow. So yeah, so it moved 6% on this day. On that low, that was just a very bearish candle. But 2%. So it's there's a lot of buying in this candle. You know, even if we compare it to something a little bit up here, no, you can't really compare it here. Yeah. So this is another one that was a pretty heavy volume candle, 4.5%. So the fact there's that much volume and it's at a higher price means there's more dollars. There's just a lot of people buying the dip here. And it got instantly negated on lower volume. So yeah, it's looking pretty bullish. So it remains to be seen. But that's basically all I see. You know, we have a strong wave here, a little bit weaker wave. We negated it with one candle, so that is a very strong decline. But we are still red cycle, so it's still bearish. But tomorrow's going to be a big day. We're going to have to see. So with that, I think that's all Wyckoff wrote on the major indexes. Hey, if you guys have any questions or comments, please drop it down below. And if you guys like the content, feel free to hit that like button. Thanks again. All right, take care.